Today I'll be presenting Outpacing the Market, Thoughts for Maximizing Returns in 2025. So start with the presentation agenda. I want to give you a few thoughts on precious metals and copper and how I think they're going to do in 2025, followed by 3 reflections on last year, and then finally some words on my YouTube video series Field Notes and my newsletter. So I presented basically the same slide last year, and I think I was more or less right. Precious metals were the place to be in 2024, and I do think they're going to be the place to be in 2025, and I said copper maybe, and I was sort of right on that too. Copper had a nice run in Q2, maybe mid-year, but just wasn't able to end the year with the strength that we saw, and that might be where we're headed this year too. But first we'll start with precious metals. So precious metals did, or gold in particular, did exactly what you wanted to do. It protected your wealth, your purchasing power against monetary or poor monetary policy. And we had a really good run in the gold price. And the corresponding equities, it wasn't a tide that raised all boats, but if you picked the right companies, you certainly did well. The junior stock review premium portfolio had a weighted average return over 150%. And that was on the back of companies like G Mining, who's presenting with me today, Montage Gold, Abra Silver. These companies had outsized returns and really were the backbone of that good return. The correction in November, I would say, we did have a good move in the gold price and select equities did move. And I think there was somewhat of a fear trade going into the US election. Basically, there were so many unknowns and uncertainty surrounding who would be elected and what the repercussions might be if the wrong person gets in, however you want to view that. Trump gets in and there's, I think, to my surprise to a bit, there was a lot more optimism than I thought there would be surrounding the US economy. And it ended up being the perfect storm for the gold price to take a step back. And unfortunately, the equities, as they do on the upside and the downside, they leverage a little bit further. And we ended the year in not the best form. That led into the December FOMC decision. The Fed lowered rates by 0.25%, and I think that was basically telegraphed the whole year. People expected that. What they maybe didn't expect was Powell to be as hawkish as he was in his press conference and maybe in the FOMC meetings. But I would tend to say you need to focus on action over words. Fed chairs are much like politicians, and I think his words were trying to dissuade you that the trend that's actually in place now is one of lowering or easing, and he wants to seem like he's got more actions in the fire than he really does, and so he uses his words to do that. And unfortunately, the market, I think, holds on to that too much. The optimism that Trump came with in terms of turning U.S. economy around, they may or may not be right, but what I don't think is that he's going to stop spending. There's nothing that suggests to me from an economic side that he's any different than any other politician, left or right, that don't fix problems with spending. And so I think that stays firmly in place, and I think the trend is definitely to lower rates in 2025. And that doesn't mean it has to go to 0%, but I think once the market sees that the U.S. economy is not going to maybe do what they think it's going to do, and we go towards more easing. Finally, comment on gold. Like I said, I think it did what it was supposed to do this year, and I think it's going to continue doing that in the future. And central banks and more investors in the West, I think, are going to continue to buy it. Remember, it's not simultaneously someone else's liability. It isn't linked to poor monetary policy, and it can't be sanctioned. That physicality or tangibility in a very much a digital world is what sets gold apart, in my view, and I think what keeps it at the forefront to smart money moving forward. And I think it's a shame that, in a way, that Bitcoin hit the high that it did and sort of took some thunder away from what I think was a pretty decent gold market last year. And I don't think that gold or Bitcoin is digital gold. They're very different. And again, that tangibility and that history of gold throughout humanity's history, I think is more meaningful and will only become more meaningful into the future. I'll take a stab and I'll say that I think that gold's going to end up over 3,000 to end next year, and I think silver over 45. So where's the opportunity? So like I said, I think the backbone of a portfolio probably is gold or precious metals. But the equities is really where you get the leverage and what I think most investors are interested in, that chance to really make some money. This chart is of GDX, and it goes all the way back to 2006. But the most important points of the 2011 high at $1,900 gold, and then the current state at $35 a share today at $2,700 gold, you can see what the potential opportunity might be. Like I said, the junior stock of a premium portfolio had an average weighted return over 150% in a year where GDX, I don't know, had a 10 or 15% blip. It shows you if you can pick the right companies in a general positive environment or positive precious metal environment, you can make a lot more money. So a doubling in the GDX at whatever the gold price might be in the future, if you pick the right companies, could potentially bring big returns. So what do you invest in? Well, I would say that exploration is probably the most hated of all the types of companies out there right now. There's still a plethora of exploration companies that have trouble raising money, and probably for good reason. But it's very much hated until you make that discovery. I think with project generation companies, junior companies that are led by high technical acumen teams that put together portfolios that are in good jurisdictions and they're JVing to the right people, good senior mining companies or juniors with big pocketbooks or access to cash. These are the types of companies that you want to be invested in because they give such a good risk to reward. You give up upside, which is very true with a project generator, but the more important is you gain downside protection. And the more I've been an investor in this sector, protecting your downside is so very important. And thinking too much about the upside, I think, especially for newbie investors, can cause you to make a lot of mistakes. So to me, this business model is how you want to play exploration. It's the best risk to reward. I think the best companies in the project generation business are companies that have sort of X factors. I've got two companies, and these happen to be the two biggest companies in my personal portfolio and allocated in the newsletter. Start with Kenorland Minerals. Their X factor is they already have a discovery in Renault. The JV is with Sumitomo. They were able to convert their minority stake into a 4% NSR. In my view, given what I think Renault, what the size of it is and the timeline to construction, to me, that alone is worth more than their current market cap, which means you get the world-class exploration team led by Zach Flood, and you get all their project portfolio and $30 million in cash for free. So to me, this is an excellent place to be in terms of investing in a project generation company. Next is Orion. Orion is a hybrid of the sorts. They've got a portfolio of projects that they JV with other companies, and then they have 100% owned ground in Risky that they explore themselves. The X factor for Orion is that they have a JV on their Helmi project with B2 Gold. And for those that don't know, this is located in Finland, and it's coincident with the Rupert Resources Ikkari deposit project. I think it's going to be a mine in the future. If you look at the optimization of that open pit in the future, I believe that they need to buy or acquire Helmi's ground to make this make the most sense. They don't have to, but I think it makes the most sense. They've already done a deal with B2, and in my view, I think we'll see a deal on the rest of Helmi and really consolidation of this area and put Ikkari definitely on the map as a world-class asset. Again, you want to look for good companies that they're doing business with, good locales, Canada, Nevada, Finland, Australia, and they've got that X factor. Now with the development and production, and just like the explorers, the people matter so much, but not just the management teams. I think you also want to look on the strategic side of things. What senior mining companies that these companies have relationships with, who have minority stakes, or have like a single investor invested in it that might have some clout within the market. You can probably think of some of these people off the top of your head now. I made two companies that I listed before that were the big winners in the portfolio so far. G Mining, who's presenting with me today. The Gignac family within the industry is well known as being mine builders. Louis Sr. built a mid-tier miner, sold it, started G Mining Services with his sons, and now Louis Pierre, his son, is at the helm of G Mining, and they've just gone into commercial production at Tocantinzinho last fall and made a massive transaction in acquiring Oko West, and really has put them on the map to the retail crowd as someone to look for in the future for value add and someone who delivers on what they speak. And unfortunately, that isn't the norm within the sector. So when you find these people, I think you need to invest in them. Montage Gold, I had to hold that stock to get share price recognition for more than 2 years. And just this past year, Lundin Group was always a part of the share registry, but they came out publicly and said, this is a priority project for us. They ousted the management team, brought in new people, and showed publicly that they were interested in this and were backing it. The share price flew, and really all those things that I saw 2 years ago came to the forefront. Lastly, a guy like Richard Wark, whose Augusta Group has, again, another history of developing assets and selling them for premiums in the market. I think Solaris is that next one and could be, now that they've re-domiciled the company outside. Again, some background on that. The Canadian government blocked an investment by Xinjiang early last year, a really deplorable move by an overstepping government, in my view. But they've re-domiciled out of Canada, and now the 2025 is set up for someone else to come in there, whether it's Xinjiang again for a minority stake or maybe it's an all-out buyout. But these people have serially do the same things over and over again. And if you can get them for the right price, Solaris, I think, hit a low below $2 just a couple months ago. And now that they've re-domiciled and the path is clear for an investment, that stock is up over $5 or around $5 now. So when the opportunity's there, you need to be able to strike. Next to those people and those strategics, size and location, I think, are always going to be a big deal, especially in the fragmented world that we live in today, that split between East and West, and really the wild card of whatever Trump's going to do on this tariff front and what that means in a world that has war and the different social problems that we do have. A company like Thesis Gold, who's presenting with me today, they've got 5 million ounces of gold equivalent. It's located in central BC. In my view, they've done all the right things with their relationship with the First Nations in developing that deposit, combining ranch and lawyers, and moving that towards PFS by the end of the year. There's just not many companies out there that have 5 million ounces of gold equivalent and have that production profile up over 200,000 ounces a year at this stage of development. It's a really small list, and they're located in the right locale. So I think they're primed for one of those strategics to take a minority stake or eventually take them out. So copper in 2025, I do think much like I did last year, definitely for more reasons that it's maybe still a maybe. You just never know with these markets. And again, I wouldn't not invest in a good company just because my opinion on a metal price. No one can predict these things with any consistency, and I know myself that I can't. So if you find good companies, you invest in them, and the metal price is just one way that you can make money on that company. The biggest thing I think that people need to think about is the effect of Trump as he comes in on Monday and what these tariffs might mean. As I said earlier, it's a fragmented world. The divide between East and West has never been bigger. So what is that going to look like once he starts trying to implement tariffs on countries like China? Where does this go? How does it affect these metals markets? Is it a positive or a negative? Looking back to his last term, I think it's sort of stagnated the market, so there wasn't really a positive or a negative associated with it. Will it be the same? I think there's a lot of question marks there. One thing I do think would be a positive for the copper market is if the market sees a clear path to stimulus, whether that's lowering of interest rates, whether that's Trump actually putting actions to words and speeding up permitting timelines, these sorts of things. But focus on what is done and not necessarily what they say. Until they start doing stuff, you can't put too much weight into it. I do think it's inevitable for the copper price to go up. It's just when. You need $5, $6 per pound copper to incentivize development. That's just a fact. And if we're truly headed towards electrification to AI data centers, obviously the amount of copper produced is going to have to go up, and corresponding development has to have higher copper prices. So to me, it's inevitable. It's just when. The last point, and it kind of goes into the comments on Solaris, I do think that M&A could be a stimulus to the equities outside of the copper price going up. Meaning if we saw a deal with Solaris, whether that's a minority stake or an all-out takeout, or with some of the other copper companies that I can think of, I think that could possibly be or generate interest from the market in moving some of these share prices up, almost regardless of where the copper price is. Each year, I like to reflect on the positive and negatives of the prior year. And like I said, 2024 was a great year for the portfolio, up over 150%. In saying that, reflecting and trying to get better, I think, is something that everybody should do. And that way you're not lying to yourself or confusing a bull market with brains. You're actually being critical on your actions. That said, being too critical of yourself, I think, can be a problem too. And you can, whether it's listening to me or anybody else, you take what we say and you believe it or don't believe it or use it as actionable. You can sometimes, oh, I should have listened to that guy. I should have done this. One thing I've learned is when you look back on your mistakes, for one thing, you were all going to make them. Nobody bats 1,000. The second point to that is you can't beat yourself up about it. You need to rebound, get better, and make sure that those mistakes aren't something that knocks you out of the market, meaning you're way over allocated on a position that you thought was going to make you a millionaire, and it didn't. You want to stay in the game as long as possible, hit those bull markets, and learn those lessons along the way, because wealth is built over time. It's not this instantaneous thing. I was recently reading a book called The 5 a.m. Club by Robin Sharma, and he says, we only hear what we're ready to hear. All learning meets us exactly where we're at. And as we grow greater, we understand better. And for me, having made the mistakes I did in 2022 and 2023, and having had good mentors in my life as an investor, I did take it too hard. And I think what you need to realize is that, again, it's going to happen. You just have to get better along the way. And just remember this quote, because I think it's so wise, whether it's in investing or any part of your life. Talking about mentors, if you read the book Think and Grow Rich, in one of the chapters, he discusses having a round table in your head and seating your mentors at that table. And when you have a decision to make, you bring that decision to the round table and you sort of think of the issue or the decision to be made like those mentors would. And so you go one by one around the round table and then you make your decision. To some people that might sound hokey, I get it. But I think if you implement it, and speaking from experience, it's something that actually does really help. And so I suggest reading that book, and I suggest, if you can, trying to implement something like that. 2024 was a really good year, and one thing that it did was reinforce the fact that when I have high conviction picks, I need to make sure that there are a significant enough amount of my portfolio that it makes a discernible difference. When I first started as an investor, I would have too many small positions, and I would put all that work in, and then you put $1,000 in, and I get $2,000. That is great. That's not to diminish that, and especially in relation to what your actual portfolio is, that might be really good. But if you want to make a difference, usually you're going to have to bet bigger when you have high conviction picks. And to me, I want a 10%-ish weighting to make sure that when I do get a win, that it makes a discernible difference, yet won't knock me out of the game if I'm wrong, and I will be wrong, just to what degree. For newbies, I really, really suggest that you go as few positions as possible, but you know them really, really exceptionally well. And that percentage allocation really varies by your profit timeline, your risk tolerance, and your knowledge in the sector. Timelines, quickly on timelines, bull and bear markets. The interesting fact is in a bear market, timelines in terms of share price recognition completely slow down, if not don't exist. Meaning good news is sold or share prices just continue downwards even though a company is getting better. These are obviously times to buy. In a bull market, it's the exact opposite. It's where recognition is given to the company by the market, even preceding success. And so this is obviously the dichotomy of the buy side. It's the time to sell. And so it's working that out and understanding where you are in the cycle that I think should help you navigate it in terms of the buys and sells and that going forward. Finally, field notes. I started this in late 2023. There's 5 pieces of content on the net. It follows me to the sites, to the companies I'm invested in. I think it's really well done, and the companies featured right now are FPX Nickel and Altius Minerals, and there's a couple interviews on there, one with David Lotan and another one with Brian Dalton. Finally, Junior Stock Review Premium. It's a direct reflection of my personal portfolio. It's published weekly. I give market and portfolio commentary. I try to answer all my subscribers' questions, and 2024 ended up being an exceptional year for those that were subscribers. If you have any questions, you can email me here or you pull me aside in the hallway. Thank you very much.